Okay, I know Josh has a hard stop. He fit us in today. He's gotta go right at 12, right? Didn't you tell me you had somewhere?
12 if I can.
Yeah, okay,
Yes.
cool. So we're gonna get started, even though everybody that's supposed to be on Zoom isn't on Zoom yet, so they'll have to catch us where we are.
Hey,
Right.
that's
Cool.
cool. You know, aren't most agents in 5 minutes? Like, that way?
I'm not Anthony and Sherry. And then we've got obviously some other agents here in the office. Would love to have you in person when you guys can make it. We do these every Wednesday. And just give Josh another plug here before I introduce him. He's also going to be joining us next week on Thursday at our investors panel at the Salt Lake Community College Miller campus. Super excited about that. We were just talking about that, the different type of investors we have and their different specialties and their niches and just all the information. There's gonna be too much. It's like, oh, 3 hours is gonna go by so fast, right? But we're looking forward to that. So Sherry, if you don't have the link to that, reach out to me and I'll get you that. I know Anthony does. But yeah, Josh, we've known Josh for every time I say this, I'm surprised how long it's been. Close to 20 years. Amazing. Josh taught me a lot about investing. I shared some things with him. We kind of learned some together as we built our portfolios. But Josh did all my financing for my portfolio. And so it's just been a fun ride. And what I love about Josh is he is a details guy. So you can get a lot of data today. You're going to get it. So now see, I'm setting you up. So you better have it.
Hopefully I have the right PowerPoint this time.
No, I mean, Josh is a master of his craft, right? He's always learning. He's always taking in the information and dissecting it and then articulating it out in a manner to where the average person can understand it. And that's what I really like about your podcasts, your YouTubes, your clips and everything. It's like, oh, that makes sense. Because when I'm reading some of the market data and stuff, it's like, it's really hard to follow sometimes, right? And put together. So Josh does just an amazing job at that. And he's got some slides to share with us. And so we'll get you a copy of that as well. So I'm gonna let Josh come up here and tell you anything else he wants to about himself, get started with this presentation, and I'm gonna share his screen so you can see the slide.
Cool.
Yeah,
Game on. Thanks, everybody. Appreciate it, Jeff. Yeah, Jeff and I were just talking about the real estate investor event that is happening next week. And what I am most excited about is that everybody that's in that mastermind has a different niche. So as Jeff was describing them to me, all the different vocations, if you will, around real estate investing, I was like, I don't know how to do that. I don't know anything about that. I don't know anything about that. So I'm really excited as well, not to just show up and share what I know, but to learn from so many different areas, because I think real estate investing is getting a little bit more challenging in some lights. And so to know cross locations for me is super exciting. So I hope you all will come, and I hope you'll invite your friends and family and clients, because I think it's going to be absolutely incredible.
That's next Thursday.
Next Thursday. Yes, that's right. Cool, thanks. Ready for me to roll?
Hey, give me a thumbs up or say something if you can see the slide. Make sure that we're sharing the right screen there for you.
Eric, I'm gonna send you that.
Somebody.
I can see
Anthony,
it.
can you see the screen, buddy?
Yep.
All right, thanks
Perfect.
so much. Cool. Feel free to, it's gonna be hard for me to manage questions in the chat. So just feel free to come off of your mute and ask any questions that you have. I'm happy to pause. So today, I want to teach you some ninja voodoo mortgage magic. Ninja voodoo mortgage magic. And that's right. We're gonna get shirts made. Colin, let's go. Neo and EXP Realty. I promise you that 90% of realtors don't understand this. 0% of consumers understand this, and less than half of mortgage lenders even understand how to do this. And it's a strategy that's going to help everybody involved. Realtors win, sellers win, buyers win. I think people don't really dive into it and really embrace it because it feels complicated. My job is to show you how powerful it is and also how simple it is. Now, my biggest fear is that we go through this next hour together and we don't do anything. We don't find anybody to help. So I want to like pre-set the stage here. These are the questions I want you to be asking yourself and be thinking about as we go through this presentation. What buyers are you working with in the last year who ended up not buying the home due to rates or inventory? I'm sure everybody's had somebody drop out or just say, pause, I'm just gonna hang for a bit. What buyers are you currently working with that aren't getting offers accepted because they're lowballing or they can't qualify for enough home? Rates went up, I was in the 500s, now I'm in the 400s. I really can't find what I'm looking for. This strategy will help them. What homeowners have you talked to in the last year that expressed interest in moving, but didn't end up doing anything? For some reason, they got scared of the market. They just hit pause. That's somebody that we should think about talking to. And are you working with any sellers who are contemplating a price reduction? So if houses aren't selling as fast as they were, sellers are thinking about or getting nervous, thinking about price reductions. These are all people that I would encourage you just to write down their names. And then I'd love to talk to you about how this strategy will help them in their specific situation. So let's get super clear on the problem. The problem that this strategy solves is that we're seeing skyrocketing contract cancellations. I'm seeing data and hearing that whether it's a seller saying, oh, screw it, my house didn't sell, I'm off the market, or whether it's a buyer saying, hey, I wrote the offer on this, now I'm really looking at the impact of the payment, I'm canceling the contract. So this is a solution to that. Buyers trying to lowball sellers and causing sellers to cancel listings, sellers wasting a ton of money due to significant price reductions, and we're going to give you, as a listing agent, a price reduction mitigation strategy. So homes aren't selling, let's pull the lever of reducing the price. I want to teach you how to mitigate that damage for that seller. And I think if positioned right, that can be one of your unique selling propositions when you walk in and do a listing presentation. Oh, I've already talked to 2 other realtors, or I'm going to talk to 2 other realtors. Cool. How many of them talk to you about their price reduction mitigation strategy? None. Okay, well, 9% of our listings, or whatever the number is in our area, are having price reductions. You don't have a mitigation strategy, you're leaving money on the table, period. So let's talk about that first. So all of those are problems that we're gonna solve on this. So just real quick, let me just check in with everybody. What are you all seeing in regards to contract cancellations and price reduction? Are you seeing them? Is it going up, getting worse, getting better?
Definitely.
It's happening. Both price reduction and cancellations you're seeing?
Yes.
Yeah. And what are the reasons you're hearing for it?
What's funny is they're not even like my most recent one is they did inspection and they didn't even try to negotiate anything. They just took the canceling contract.
Wow.
And I mean, they did mention that there was a sewer line that was busted and was like, oh, not a problem, we'll take care of it, have it fixed, but then they canceled.
Yeah.
So not even.
So it was negative news, it was payment shock, there's something else behind that didn't come up, but we're seeing it.
I think sometimes you don't get to the real reason, because I've heard other agents say that their buyer canceled and they couldn't figure out the reason why. They're just like, no, we're out, whether it's cold feet, nervousness, uncertainty, whatever that was. It's like, no, I just don't feel right moving forward. We haven't seen the cancellations, more the price reductions. Correct.
So I'm going to show you some data that I think might give us some insight onto why those are, and people might not feel comfortable saying it, being transparent around it, but there's some data that might lead us in the right direction. So this slide just kind of anchors us to where we're at, right? From August 2021 to August 2022, inventory is up 122%. We're still relatively low in terms of context over the last decade. But it's a shift. The market is definitely shifting. The under contracts at the same time, there were 2,085 under contracts in 21. There is 1,500 in August of 22. So we have 122% more in terms of inventory, and we have 25% less under contract. You're all feeling it. Just to like put statistics to it, there is a shift that is occurring in our local market. According to Redfin, this shows us that we have median sales prices that have peaked and are starting to go down. Now, it's an important distinction to understand that median sales price isn't really overall price reduction, because median is the middle of the market, right? Maybe we just had a few less $1 million home sale and a few more $400,000 home sale and median price, but it tells part of the narrative of the story of what's going on. These are years going back to 2019. So the blue line is 2019. The black line is 2022, and you can see, things were going up in median, and now they've peaked and started to move lower. Another indication there's a shift going on. Deals falling through at the fastest clip since 2020 when COVID hit. This is June data. I just saw this data for July, but it was at 8 o'clock last night. I couldn't read the slides. I already updated my slides twice. We're good. But we're starting to see that steep incline in the number of deals falling through contract cancellations, just like you're feeling. And then these are price drops. Just saw this data for July. This is up to about 8% nationally. I think the number was 7.9% of all listings across the country are now having price drops. And we're starting to see articles about this. I just saw an article on Business Insider Weekly last week that said the 10 hottest housing markets through the COVID boom are now the 10 fastest markets for price reductions. So you're starting to get that negative connotation from the news that are starting to freak people out because the news is picking up on some of these price drops. I believe a lot of that's because sellers just think that the market's going to appreciate at 20%. So you sold at 500, mine must be worth 600. Oh, whoops, it's not, right? There's just reality setting in, but it all just talks about the shift. And so price drops and cancellations, not just happening in Salt Lake, happening nationwide. There's a bit of a shift going on. All right. This might be the most important slide in the whole deck. And I think it answers the question of cancellations, people withdrawing, and not really giving us the data, not being transparent around it. So I want to just take this one slow. The gray line is 2020. From left to right, we would be from January to December. And this shows the average home buyer's mortgage payment. So what happened to price values in 2020? They went crazy, right? Between January and the end of the year, the market just went insane. But people's mortgage payments actually went down. So what does that tell us? Price isn't the problem because prices went up, payments went sideways. Cool, market keeps rocketing. 2021, blue line, payments start to go up a little bit. We go from, I don't know, let's call it 1,500-ish to 1,700-ish. But at this point, we start to see a little bit of inflation and we start to see wage gains. There's a lot of tightness in the housing, in the employment market. Wages start to go up. So yeah, the average homeowner's house payment went up $200 or $250 a month, but my income went up $700 a month or $500 a month. So I didn't really feel it. It was net neutral to me. What happened to real estate values in 2021? Insane, right? Utah 30-something% appreciation. So the point with this slide and why I say this is so important is we saw 20 to 30% price appreciation in both 20 and 21. And it didn't even dent demand. People didn't care. They were like, whatever, I'll pay more than the asking price. 22. Now we start to see those payments go up. All of a sudden your payment goes from $1,700 to $2,459, let's just call it $2,500. And you got an $800 increase in payment in 6 months. But the average, that's average across the country. Say what? Breaks. So the point of this slide, my major takeaway of this slide is the price isn't the problem. Affordability is the problem. And until we figure out how to make housing more affordable, that could be a combination of price, be a combination of interest rate. We're also seeing, I just read an economic report this morning that part of the last week's labor report that shocked everybody, how many jobs were created, something like 500,000 jobs, and they were expecting 200,000. The labor market is so tight that wages are really moving at one of the fastest paces they've moved since before the Great Recession. So incomes are going up, good. That makes housing a little bit more affordable. But what other lever can we pull besides dropping the price? That's the question that we want to get to. All right, and then just context, this just gives you a longer time horizon. You can kind of see from 2015 to 2000, let's call it 21, really the start of 22, it's just kind of like payments are going up, but so is everybody's income. It's like we're not really feeling it. And then all of a sudden you see that, that sharp rocket ride higher, and that's where people started to really pause. So question is this a pricing problem or it's an affordability problem? I believe this is absolutely an affordability problem, and that's why people are balking. So the solution is the seller-paid rate buydown strategy. So I'm going to give you a couple of case studies to get like really deep in here, but I want to make sure you understand the benefits, the main benefits of this strategy and why it's more effective than a price reduction. So number one, the buyer will have lower payments and pay a lot less interest over the life of the loan. A lot less interest. I'll show you it over 5, 10, 15-year time horizons so you can see how much the buyer saves over time. Number two, the buyer is able to qualify for higher loan amounts and better properties. I have clients who've been priced out of this market, and we have to wait till that payment. I can get that payment down to X to get them into the home price that they want. And number three, the seller wins because the buyer strategy is 300% more effective at improving affordability than a price reduction. So let me say that again. $10,000 concession from a seller used toward buying down the interest rate, and I'm talking about a permanent interest rate reduction, like it's lower forever, is the same impact on the buyer's affordability as a $30,000 price reduction. Which one do you want to do as a seller? 30,000 or 10? 10 sounds good, right? But now that we know what put the brakes on the housing market was the payment, not prices going up, we can start working on the real problem, which is affordability. We just need to know the tool. So to sum that up, less concessions from the seller and more affordability for the buyer. That's what this strategy does. And by extension of that, makes your jobs easier because you have a smaller gap between what the buyer wants and what the seller wants. Pause for just a second. I'm going to run into a couple of case studies. Everybody online hearing this okay? Any questions for me?
No, we're good. Keep going.
Awesome. Cool. Thanks for the feedback. Appreciate it. Like, am I frozen? Okay. So this strategy works with every type of loan. Big loans, small loans, government loans, conventional loans, FHA loans. This is the first case study that I'm going to walk you through. And in this case study, we actually did two things with the concession from the seller. We first took, this is a 10% down purchase on a $675,000 home. They're planning to put 10% down. The going interest rate was 5.49, PITI payment 3801. Principal, well, excuse me, that would be principal, interest, taxes, and mortgage insurance payment was 3801. That's the far left vertical column that you see there. The second column over is this seller is getting tired of his house not selling, so they're thinking about dropping the price 25 grand. Or the buyer just went to Zillow, clicked on the button that said price drops in my neighborhood, saw all the price drops and said, that's my house, but I'm going to pay 25,000 less because everybody's dropping the price, right? Either of those situations may be occurring here. But this is what it would look like. The second column over is what it would look like in a price reduction. Seller nets 25,000 less. Buyer saves $130 a month. 130 bucks is a chump change, but it's not the best place for the capital if we identify affordability being the problem. So in the third column over, we said, all right, let's say the seller says, I'm not giving you 25 grand, but I'll come off 12.5. I'll split the difference with you. I'll split the baby. And we use that 12,500 in seller paid concession to do two things. The first thing we're going to do is we're going to permanently buy out the buyer's mortgage insurance. So they don't have a monthly mortgage insurance premium. It's a one-time upfront premium. That, just so you're aware, paying it in a lump sum upfront saves the buyer about 40% of that premium amortized over the 5 or 10 year span that MI would be on there. So they got a 40% discount on that premium, and they have to take that right out of their payment from day one. In this scenario, that cost about $4,500. So now I've got $8,000 left. I take the $8,000, I use that to permanently buy down the interest rate. Now we get down to, and these, the rates were the day that I put this together. Don't get lost in that because they're moving every single day and rates have been pretty volatile. But just understand the strategy. With the extra 8,000, we got the interest rate down to 4.875 as well. The buyer's monthly net saving is 301. More than double the savings, 50% the concession. Cool. Okay. Next strat, and so then we said, all right, well, what if we had a little bit different scenario here? In the fourth column, let's say that the buyer was approved for 3,500. That's all they qualify for. And they wanted this home. How far would you have to reduce the price in order to hit that $3,500 payment? Well, you have to drop it $59,000. So for 12 grand in concession, it can equal the same payment as a $59,000 price drop. So I say, like, as a general disclaimer, money used towards a seller interest rate buy down is 300% as effective as the price reduction. Well, in this illustration, it's 500%, about 500 or 450% as effective because I use the mortgage insurance and I use the rate buy down in combination. That's the most leveraged way to reduce payment possible. I'll just pause with the question. Anybody have anything that they want me to answer about the strategy so far?
Do
Okay.
you always combine those two things with the mortgage insurance and the rate buy down just to get rid of that? Or just, is there a scenario where just a rate buy down would be better?
Well, obviously, if they're at 80%, mortgage insurance is out the window. Based on your different FICO scores, there's different adjustments to mortgage insurance. So there could be an instance where somebody had such a high FICO score, so low debt to income ratio, and the mortgage insurance quote came back so low that it just didn't pay the stupid monthly premium and let's put it towards the interest rate. I think that would be very rare.
So in most cases, get rid of it.
Most cases, combining the two is going to give you the greatest impact on the payment. Correct. Yeah, I mean, and conversely, let's say the person had a fairly low credit score. Mortgage insurance is insanely expensive. So maybe it would make sense to pay the whole $12,500 towards buying out the mortgage insurance policy, because maybe the mortgage insurance policy was $500 a month.
Yeah.
So you just have to run both calculators and go, which yields us the greatest discount to the payment for the buyer based on their situation.
So it's really buyer specific then. So you kind of just strategize with the seller if they don't have a buyer yet, is kind of like heck there.
Totally. I think where this comes into what we're starting to see is we're meeting with a lot of our builder and NEO has offices we blend all over the country, 49 states. So we have builders that we work with all over the country. What we're starting to see, and usually the first thing that tips over in a slowdown in real estate is the new construction market. So the builders are really like in oh shit mode. And so we're starting to see builders.
Not a good year.
Yeah, no, it's not a good year. They're like, cool, here comes the inventory, there goes the buyers. Right, here's my supply chain, they're finally getting ironed out. I can finish my houses. Now my buyers can't afford. So we're starting to see builders put disclaimers and also realtors put disclaimers and that says, this house, I'll get you the exact verbiage that a couple of builders are using, but this house comes with discounted mortgage financing paid for or sponsored by the seller. And they're basically saying, look, if you buy with us, you're going to get an interest rate that is 0.5% or 0.75% lower than if you go down the street and buy a home over there. And check the payment difference on those. Our price is the same, but my payment over here is going to be $300 or $400 less. So you're starting to see people proactively market that.
So how would you say, promote it from a seller's perspective?
So I would build something like this into a presentation that has a link that you can literally just put in your NMLS comments. Yeah. And then I can film a little video that just says, you know, this house, the seller has agreed to subsidize an interest rate buy down for a buyer, going market rate 5.49 for this jumbo mortgage or whatever kind of mortgage is. The seller has agreed to a subsidy that could equal as much as a 0.5% reduction in interest rate over 30 years. That'll save your buyer $87,000. right? So we can build that into just a link that they could click on. Yeah, cool. So we talked about payment difference. Let's just quickly look at how this works long term. So the price reduction over 5 years would save the buyer $6,166 in payment. The MI and interest rate buy down would save them $22,833. So it gets bigger the longer time horizon you look at. And that's what's crazy is even the price reduction doesn't give you as much interest savings, because the lower the interest rate, if you look at an amortization table, the more money goes towards principal. So lowering the interest rate and getting rid of the MI has a magnified effect on the total amount of savings over longer time horizons as well. This is over 15 years. You see the price reduction. You're going to pay $425,000 in mortgage insurance and interest rate. But with the buy down strategy, you're going to only pay $381,000. So you say the buyer saves $44,000 over 15 years, plus the seller saved $12,500. Right, so the total amount of value created in creating this type of an exchange would be $56,000 that the two parties are better off. Cool. So let's walk through a VA case study. Very similar. $500,000 purchase price in the first far left vertical column. Price reduction of $25,000. VA doesn't have mortgage insurance. They have a funding fee, but not a monthly fee. So we take the full $12,500 credit. We drop the interest rate from 5.25 to 4.375, saves them $270 a month. And in order to equal that same payment, they would need to drop the price $41,000. So in that case, it's like 350% more effective than making the house affordable than a price reduction. But I want you to think of it backwards. Let's say you get a buyer who's pre-approved for $458,000 because $3,000 is their max qualifying payment, can't get the VA loan approved for anymore, and they need a $500,000 house. Well, you can either go to a $500,000 house and ask them to reduce the price by $41,000, or you can go look for $500,000 houses and ask them to give up 2.5%, $12,000 in Seller-Paid Buydown. So think of it both ways, how the strategy works. Same thing, over 60 months, saving $21,000 as compared to the price reduction, you only saving $7,000. Look at it over 15 years, saving another 42 Gs. So short-term, long-term, conventional VA, you end up ahead. And then the last case study is a jumbo loan scenario. And the bigger the loan, the more impactful this starts to get. And probably the more concession you have to play with, right? So you can really do some interesting numbers here. In fact, I'll tell you a real story right after this slide. So in the jumbo scenario, 1.35 million sales price, thinking about a $75,000 price reduction, saves you $409 a month. With me? Okay. Seller-Paid Rate Buydown, $37,000, so half the concession of a $75,000 price drop. Drops that interest rate from 5.5 to 4.375, saves them $739 a month. You'd have to drop the price $135,000 to equal the same impact on payment as $37,000 towards the interest rate buyout. This is a real story. We're talking with our compliance department. We're on a webinar, and we're trying to figure out how can we do this legally, but without triggering high cost loan, predatory lending requirements. All of our disclosure systems, when I say all of us, mortgage lenders across the country, we all have this disclosure monitoring that says, oh, you're about to trigger fees or an interest rate that is this percentage above the national average. You're now in predatory lending. Compliance companies shut it down. So we had to do a bunch of due diligence to figure out how to do this correctly and get it across the finish line. I'll talk more on that in a second, but we're literally in that Zoom webinar. I get a text from a client. Pull my phone and show you the text. She's in California. I've helped her. This is our fourth house. I helped her when she was a resident, buying as a resident position. Then she took an attending job. I helped her with that house. Then she bought a second home. Now she's buying another home, and she's buying a $5.8 million home in California right now as a second home. Big home. She offered 5.5. They were listed at 5.9, seller counters back at 5.9. Go pound sand, 5.9. And the agents texted me and the clients texted me at the same time, and the agent's like, they're 400 grand. Like, let's quit wasting our time. It's not gonna happen. And I'm like, what? Let me just think about this for a minute. And so I put together an analysis like this for her, and I said, okay, here's what you want. You want 5.5, here's your payment. They want 5.9, here's your payment. So yeah, you're off 400 grand, but in payment, you're only off, what was it, like, I don't know, $1,000, whatever it was. And I said, let me show you two other strategies. What if you offered 5.9 and they gave you $100,000 concession to buy down your interest rate? Payment was the same as the 5.5. And I said, or if you don't want to go to 5.9, because there might be some egos involved here, what about 5.8? And let's get $100,000 in concession. And then your payment's less than the 5.5 price. She's putting a massive down payment of $3 million down. They ended up settling at 5.8 with 100,000 in concession, and her payment was way less than the 5.5. The realtor was like, that is some, he's the one who was like, that is some voodoo ninja magic. He was like, I don't know what you did, but he's like, I thought that was dead. So when you get that kind of scenario where, you know, somebody wants to a $75,000 reduction, and the other, and they make, there's only 37,000 in play. This is the strategy that we put together. And again, I want you to think about it the other way. Somebody qualifies for 1.2, that's their max qualifying amount. They fall in love with a 1.3 house. How do you get them there? Right? That's a strategy that can help. Same thing. I won't belabor the point here, but if we look at it, if I show a client this, a lot of times they go, yeah, but I'm going to owe more on my mortgage. True, you're going to owe more on your mortgage, but you actually save more because with a lower interest rate, if you look at the amortization schedule, I can show you both. More of your payment each month goes to principal and less goes to interest. And now you have another $790 a month that you can invest. You can go put it in a retirement plan. You can go do fund other ventures that you want to do. And so once I walk them through kind of like a longer time horizon, they're like, oh, okay, got it. I'll pay 5.8. Makes sense. And then this just showed over 10 years, 88,000 in savings, plus the seller kept another 37 grand from the net. So we'll kind of open this up for questions or scenarios, but I'll go back to this slide. What I'm fearful of in this kind of thing is we talk through it and it sounds awesome, and then we don't think of anybody we can actually help with it. So I'll just kind of end with these questions. You know, who have you been working with that's gone stale? Who have you been working with that can't quite get to the price point? What sellers are you working with that are considering a price drop? These are all people that we should start to talk about and create these scenarios for them. We're doing a lot of the illustrations I just showed you. We call those total cost analysis. We're doing a lot of those for sellers and just giving a link and saying, here's what your lower interest, below market interest rate loan would look like. We're doing it a lot for buyers, saying, hey, don't go in and try to beat them up 50 grand. Especially when the realtor is saying, 50 grand, like it's not happening. Cool, go in and get 15 grand. And let's get on the same page. So we're happy to do that as well. I just have to show this. I can get in trouble with my disclosure department. Thumbs up. And I'm going to pull down the screen if you don't mind. Cool. So team, questions. Do you have anybody, like if you have somebody in mind right now that check one of those 4 boxes, I'm happy to talk about it and just kind of like run a real life scenario. Does anybody have a situation they want to discuss? Client situation?
We've had a few stale listings, and we've been talking price reduction as well. We just had one, actually one just went under contract, thank goodness. But the other 2 were challenged. They're both really unique properties. And finding the right price in this market, I think is sometimes a challenge.
Yeah.
But both of them are in that, we have one at 640 and one at 700. And they're both not wanting to reduce the price, and we're not seeing the activity that we really want to. So I guess my question would be, like yours, just how do we present that on the MLS, like for the public to see? Because agents read that and say, I've got my own lender. I understand lending. They don't, right? Because I just learned a bunch of stuff I didn't know.
Yeah.
And I've been doing this for 20 years.
Yeah.
So I know that agents think they know everything, but they don't. So how do we portray that first to the public?
Yeah.
And I like the link idea. That's awesome. But like, if I can give you a property scenario, and I can let you know in the comments, like I can let you know what that seller is willing to go down to, what concessions they can give.
Yeah.
So we could build something that we could present would be really powerful. Because then when I do, like if we did a $1,000 price reduction, it hits everybody's, email again as an updated listing, and then they could see something new in the comments. Hey, we have a special financing program on this property. Put up this link, something like that. That would be really powerful.
I would see 3 potential action items. Number one, if you send me the MLS, I'll create the TCAs for both of those. And you could say, hey, I had a conversation with a client. They're willing to go 25 grand. And I'll just build one that says, I can build it. I could just build one that says, here's $10,000 credit. Or if you say, no, they're totally sold on 25, we're good, let's go with it. I'll build one with 25 for it. And we could include that link, and I'll give you the verbiage that the home builder used, because I thought it was just perfect. It was like really classy. It was really well done. It was like, we care about you, and here's what we're doing to try to help. So I'll give you that verbiage. I'd put that in the comments and say, click here, and then I'll film just a quick video. Hey, you're looking at $600,000 houses. This is the national average of mortgage payments. This is about what your buyers are looking at. The special financing credit on this home would get your clients about this much savings per month over the other homes they're looking at. So that'd be number one. Number two, we can create those in a PDF handout that can go on the the table or whatever when people come through, and it can show that illustration. So that I'm trying to figure out how do I get it in the hands of the consumer. So if we did a flyer on them, we could put it in the get it to the consumer that way.
Great talking point in the open house.
Yeah,
Great talking point in the open house.
we put our tours on QR code on our flyers too. So that would be awesome to have just that link on the flyer,
Yep.
right?
Great.
So they can actually see the video, like pick up the flyer from the front.
So you're saying you already have a dynamic flyer. Instead of adding another flyer, I give you the URL, you put the QR code.
Yeah, right on the flyer.
I like it.
Yeah.
Buyers,
Yeah.
follow this QR code.
Yeah.
Yes.
Yeah, I like that.
You
That's
want
simpler than 2 flyers. That's better. Yeah.
Just put it on.
Yeah.
Yeah.
Morgan Tag. New t-shirt.
We find this later.
Yeah.
And then the third way that I would say, so that would be step 1 and step 2. Step 3 would be when you get an offer and it's $50,000 low or whatever it is, then let me take that same total cost analysis that I built for that home. And then instead of them agreeing to 50,000, let's say you say, hey, our sellers are good with 25, they're not good with 50. I'll just say, here's the price, here's your offer, 50,000 low. Here's what a counter offer with 25,000 in concession would look like. You're going to double your payment savings. Which one do you want? And that's enough to probably drive a conversation where we could get on the phone.
How do we talk about the lender issue though? If they're already using another lender, they put in the offer,
I would just
on
say,
counter offer, how do we address that?
I would just say, allow our lender to explain the process,
Yeah.
explain the methodology. You need the explanation first. And I'll go to this next point. The reason why every lender in the country isn't shouting this from the rooftops, because everybody knows how to do this, is because most mortgage companies are run by their compliance companies, their compliance departments. CFPB comes in, you did something out of line. Wells Fargo last year got $100 million fine for disclosure issues and mortgages. You got to do a lot of mortgages to make up for that. And so compliance departments have gotten so fearful that they're not allowing any of this kind of, I'll say, creative stuff to get done. We had our compliance department, we worked with them. They went and they happened to be actually having a CFPB audit at the time. And they had several state regulators doing audits. And we were able to show them, hey, we're disclosing this as a true seller paid cost to buy down the interest rate. It isn't in the buyer's fees. We're excluding it. And here's the verbiage in the real estate purchase contract that we're using to justify where we're putting these fees.
So to market it as a buyer, buying it down is where the compliance issue is?
Correct. So most compliance departments won't allow you to move that fee. They're still gonna put it as a buyer's fee, and then they're gonna show an offset in credit. But the compliance calculation that figures APRs, that triggers high cost of lending and predatory lending, it just looks at your APR. And if that APR triggers high because of points, can't do the loan. But if you move those fees into a true seller pay, not a charge the buyer credit, but in our disclosure software, it excludes it from that calculation. But when we went to our compliance department at the very beginning, they're like, oh, hell no. I'm like, why? And they're like, because, you know, the way contracts are written, they're 7 ways from Sunday, like we'd have to get super tight verbiage on this, and then we'd have to get regulator approval. I'm like, cool.
Okay, let's do
that.
We have to do this then?
Okay, yeah, check box.
That's not a no.
So we got it through our internal risk team, and they passed it through the compliance auditors, and we're good to go. So, but a lot, we've had some other people say that they've tried this strategy with a Zions or KeyBank or kind of those types of outfits that are really heavy compliance on, and haven't been able to get it up. So there's a little bit of a finesse to it.
So basically, if we're offering that, we need to be offering it though through Neo Home Loans,
For sure, well.
right?
Yeah.
So we have to
yeah, for sure.
specify that
Yeah.
in our listing. That they would have to get.
I was just thinking
qualified.
I would run my comments by Kristen, our
Mhm.
broker, and make sure, hey, is this compliant to put on the MLS the way I.
Well, it's an offering, right? You can get this type of a situation with our lender.
Right,
The main thing that they frown upon is you saying you have to do this.
Yeah.
right.
It's like, hey, here's an option for you, but my lender does this, maybe yours does, maybe yours
You know what,
doesn't.
Yeah.
Boostos does that though, in all of his listings, he says that he wants you to use his preferred lender. And so I guess you could look at the.
Well,
Boostos verbiage, because obviously he's got. no-
maybe asking to get qualified through his preferred,
Yeah.
he can't be
Yeah.
required to.
No,
close.
it's not required, but-
But he put a comment in there.
Yeah, right.
This is awesome.
No, it
Because
is.
that
It
listing
should
we
be
just put under contract a few days ago. They have 10,000 in closing costs, and they need those closing costs, but I don't know the specifics of where that's coming from, and it's a $500,000. But ironically, I'm worried about appraisal, because our seller was saying, I want top dollar,
Yep.
and Chris, her house is the
Has all
best
that
in the neighborhood. I mean, it's amazing.
Yeah.
So I'm like, we're gonna go for the absolute top dollar, but we had to bump up our purchase price 5,000 to get them to 10.
Mhm.
So not only are we gonna set the market standard for that neighborhood, we're gonna be setting it by about 10,000 on a $500,000 townhome. So it's not, it is a little bit of a stretch. So if we don't get that, this gives me some ammunition to go back and say, you know what, we're not gonna lower our price, but here's another option.
Yep.
If we can allocate funds better,
Yep.
maybe we can make it.
Get you
still
to the
work for
same payment.
buyer. Yes,
Yes.
make it work for the buyer.
We had a similar situation. I'm just kind of throwing out real life scenarios so that you can start to think through, okay, that's a similar problem I'm having. We had a client where they offered and it was above list price and the appraisal came in low. And so they were planning to put 20% down, but now because they had to put down the gap, right? Now they only had 10% down. So we were like 10% off. It's a pretty big gap.
Yeah.
So deal's about to fall apart and we go, okay, well, would the seller give us another 2% instead of coming down 10%? They're like, yeah, we could probably get 2%. Cool, I'll just do a loan with mortgage insurance. They put 10% to gap, 10% down payment from the buyer. I take the 2% from the seller, I buy out the mortgage insurance. Payment's the same.
Yeah.
Payment's exactly the same. It's semantics. They're like, cool, that we got 2% movement, we don't have 10%. So you can do that too. Like if that appraisal comes in low, you take that money and buy out the mortgage insurance. Because
Right.
the interest rate on an 80% loan and a 90% loan is the same. The only difference is you have mortgage insurance. So if appraisal comes in low, we just take a little money from the seller as a concession, use it to buy out the mortgage insurance, payments exactly the same to the buyer. that make sense?
Yeah.
Yeah.
It makes a lot of sense.
You really have to make shirts now.
So, right now I'm working with. Very low, it's 300,000 is like max.
Yeah.
And I just got off the phone with the lender, and she's like, we need to ask for 15,000 in concessions. How do you think, like, the sellers gonna do that, you know, like?
It's
For
tough
me, I would-
market, right?
yeah,
For sure.
For me, I was thinking like originally, okay, if we offered a little bit more, then that kind of defeats the purpose of asking for that, sometimes, right? Or,
Well, I think we've got two challenges, and I'm interested to hear what you say. I think you've got challenge number one, if you're inflating the purchase price, you know, we may not get an appraisal.
That's-
So we might be back in that same kind of a thing. I'm guessing they asked for that because were they trying to buy down their interest rate? Okay, so if you offered more and the appraisal didn't come in, you'd have to move some of that money. Probably buy down or buy out the interest rate, which means you mortgage insurance, which would mean you wouldn't get quite the lift you needed on your rate. So you could end up chasing your tail a little bit there.
yeah,
My
It doesn't sound like you could do that anyway. 300
No.
with the concession, you couldn't go 315 with the concession.
no,
So
no.
your
no,
maxes are.
Originally, I was, or even asking, you know, that kind of thing. I don't know
I think it kind of comes down to the discussion on the allocation of that.
where the funds are.
What is that lender thinking?
Yeah.
And is there a better scenario, a better use of those funds?
That's exactly right.
Give her your number.
Yeah, I would, and maybe ask her to grab, what does that loan scenario look like? Can you get a analysis of that 15,000 and where it's going? And I'll just look at it and go, oh, well, they didn't think about buying out the mortgage insurance. That's the first place they should put it. Or I could say, hey, this looks like it's engineered right. And then in that case, if it's engineered right, really the only other solution would be, is there any more income that we can try to utilize than
And
not?
to be honest, originally they said, oh, ask for 5,000 sessions, and then I literally just went out, 15,000.
15's better.
Better.
Well, you always have the option too to say, hey, I just got out of a training with a different lender. I think we need to get another opinion on your scenario because you're so tight. So no harm, no foul. Let's just have somebody else put eyes on their situation.
I think that's the right call. Where are they buying?
They're so flexible.
Okay,
They're just desperate.
what's your thoughts on flexibility or concessions in that price range? Are you starting to see that?
Yeah, I
You
am
are?
seeing it. Yeah,
Okay.
I am seeing, a lot of them are even posting like, oh, we'll only do 5,000, 6,000 concessions, so
Got it.
I haven't seen that.
Even the lower price points.
Mhm.
That's news to
And
me.
that's actually, we started looking about a month ago, so I've seen it for over a month.
It kind of boils down to how long they've been on the market.
Yeah.
How motivated they've become since they listed it, and what other offers are they looking at? You might lose if they've got other choices, right? But if you're the only one they're talking to, it's like, hey, let's investigate this. Let's look at this. What can we do to keep you? Because you're the only one I got.
Yeah,
That
Makes a
reminds
big
me,
difference.
Jeff, when I started buying properties, when you guys were building your portfolio, we used to have a ratio we would shoot for to have one offer accepted out of 100. For real.
I don't think you're a realtor.
See, he was my realtor. I think my mom was just slinging offers. And so it's funny, every once in a while, I'll talk to a buyer. And well, how many offers have you put? Let me tell you a story.
too much fun during that period.
Yeah, I mean, we didn't fall in love with homes though, so it's an emotional, five offers you five homes you fell in love with and didn't get is different than 99 homes 100% fall in love with that I didn't get. But I think where I'm trying to tie that in is maybe they're just gonna need to
Yeah.
put out some offers. You
Yeah,
know,
yeah, yeah,
this might be a 25 offer deal,
yeah.
but I'm happy to look at it. I'd love to just make sure it's not here.
Thank you.
Yeah.
I will offer.
I like that, engineered right. you know?
Yeah,
Engineered right. Yeah.
I'm excited about this for listings, right? And that's
Yeah.
not even where I thought our class was going today. Was thinking about my listings, but we're just talking about this
This is
in
what my
Monday.
concern is too, the listing.
So as it relates to like, let's pivot this to sales training. One of the things that we work on a lot is disruptive questions. When somebody asks you a question that would usually have you on your heels, to have a list of disruptive questions that would go back to the consumer. So for example, Eric, I love you. Think you'll do a great job. I'm interviewing 5 other agents. 3 of them are from Homey, and and they're willing to do the deal for $500, whatever that number is. Can you do it for less? If you answer that question, you lose. You have to have a disruptive question at that moment. Respect you for doing your due diligence. Totally get it. I've sold homes. Don't want to overpay for anything. I want to net as much as possible. I'm with you. But here's the question I'd have for you. Do any of those other agents have a price reduction mitigation strategy? You're so far off of the question you asked me a minute ago, you don't even know where we're at. We're in Taylorsville, you thought we were in Draper.
Where the hell are we?
And they're just like, tell me more, right? And then you start going through some data. Like, look, here's the facts. Let's pull up whatever database we have and see all the price drops around this neighborhood, okay? Here's the game everybody's playing. House isn't selling for 30 days, drop the sales price by 50 Gs. So you're gonna get a $500 commission to sell so that you can take a $75,000 price reduction. You lose. You see my strategy. We're gonna do it right. We're gonna market the hell out of it. We're gonna do all the things I showed you I was going to do. And when that offer comes in low, because it will, that's what's happening, we're gonna employ this as a price reduction mitigation strategy. Let me show you. And I could print out a few of these. You could walk in and show them, like, here's a jumbo home. Like, we can crank these out on a listing presentation we're going to go to. If you thought that was something that you wanted to use, and say, average price drop in this area is 50 Gs, going to save the borrower $300, $25,000 towards rate buy down is going to save them $500. That's our price reduction mitigation strategy. Love that. So it's one of those disruptive questions that people go from the offensive to like, oh, you know what I mean? Get the energy moving a different direction.
Well, it's really powerful for all 3 groups of, our clients, which are buyers, and then a buyer seller, and the seller, right? Yeah, we're just talking about this Monday morning meeting of, buyers are like, I don't want to buy because I don't want, like a year ago, 6 months ago, 3 weeks ago, whatever it was, right?
Happy fast.
I'm going to 25,000 over appraisal. That's crazy. I'm just going to hold out and wait. And now they haven't come back in yet. So they're like, oh, interest rates are high now. I'm just going to keep waiting, right? So this is a solution for them. And then you've got the people that have thought about selling a house for a year or 2, and they're like, man, I missed it. I should have sold 4 months ago. I would have got top dollar. And they're thinking, well, now if I lower my price a little bit, I might get a better deal on the other side, but interest rates are higher. So it solves that problem too.
Sure, they can use it both ways.
Yeah.
Like a seller can use it to mitigate the price reduction.
Yeah.
And then they can take that right over and ask for the same concession so they can get a better interest rate on their buy.
Yeah.
So it's actually a double win if they employ the strategy both ways.
Because we've been talking about that and just how sellers are thinking, well, I've got a 3.5% interest rate now. I want to make a move, but I don't want to go get stuck with a 5.5%. I'm just going to hold off and wait.
Yeah.
Yeah. Plus, I'm getting less from my house than I would have got 6 months ago. You know what? I'll just look at it in a year or 2, see where we're at. And it's just knowledge and knowing how to put it together.
Well, you're gonna be having a conversation with them that nobody else is having.
Right. Yeah.
So disruptive questions are great in response to that,
Yeah.
that question, but also, when they're saying, why hasn't anybody else told me about this? You're, like Josh said, you're over here and all the other realtors they talked to are over here, and you're giving them an option that possibly could get them to the finish line that they didn't even know was available.
I love it because I think you can actually create clients instead of looking for clients with these options. People that have been on the fence aren't even thinking there's an option like this.
Yes.
We're actually creating clients from our SOI or advertising, which is amazing.
Have any of you read The Challenger Salesperson? Fascinating book. I think it's the greatest sales book that I've ever read. I think it's the Challenger Salesperson. I said, yeah, I think that's right. Yeah, if you Google it, you're gonna find it. In the book, there is a interviewer who goes out and interviews sales companies, the largest of the Fortune 500 companies in the country. Goodyear Tire, Xerox, all these massive companies. And they go in and they say, hey, listen, we're creating a study and we want to know what makes the difference between the top 1 or 2% of your sales teams and the rest of your sales teams. Like, what are the top 2% in the country doing across industries that's different? And so they go, I think it was like a 5-year research. And what they came back with and wrote the book around was the people who had that were the highest 2% in sales or 1% sales. They weren't the most liked, they weren't the funniest, they didn't work the hardest, they didn't do any of those things. What they did was they challenged the assumptions of the consumer. So walked in, you gave me, your theory is, your belief, you're anchored in, I'm going to become more wealthy by paying a lower commission. You're anchored in that belief, right? Well, the Challenger salesperson would listen, ask a disarming question, and then start educating you and just start teaching. And then all of a sudden you're like, screw them. I need to know what you know, because you know way more than I do. You gained my trust because you now transcended from salesperson to teacher. And that's really what you're saying is, there you go. What, I'm sorry,
The Challenger sale.
Yeah.
I love that because that is how I convert buyers at open houses, is exactly
Yep.
that.
Educate
Because
them.
they look at you, they think you're a salesperson, then you start educating them on the house. and
You
all
can
of that.
see, you can
Yeah.
feel their energy shift, can't you?
Yeah.
I love that moment when all of a sudden they're like, I'm not interested. The next thing they're like,
Wait, what? I don't know that.
yeah,
It's really cool.
you can buy a mortgage insurance. Yeah. And once you have that trust, it's just a different dynamic with the consumer. So as takeaways, what I would encourage is if you have those listings that you want me to create specialized TCAs for, allow me to do that and I'll send you the links. And if you can think of anybody who's not qualifying for the range that they're in, I'd love to talk to them as well. Yeah.
And on top of that, I would challenge you to just have your buyers get another opinion, like we were just talking
Yeah.
about. Even the ones you're currently working with, for sure, the next new buyer you get. Send them right over there.
And in full disclosure, I work with a team. So a lot of times I will have an initial conversation and my team is going to interact. So just full disclosure, the team is badass, but I don't want to mislead anyone that I'm going to be every step because I can't.
You're willing to share your PowerPoint.
For sure. He has it fired. Yeah. I got you. If you want me to print something out for like an open house, you know,
Okay.
gotta do that as well.
Awesome. Hey,
Sorry,
oh, no.
I just wanted to add, like, I really like this starting question.
Thank you.
Yeah,
When you go to a listing appointment and then you're trying to talk about pricing and everything, and sometimes it's just like, well, at some point we'll talk about whatever, it doesn't sell at the price point.
Yeah.
Now I have like a game plan, I'm not just pulling stuff on my, you know.
Yeah.
I love that, like I do have a freaking solution.
Confidence builder, isn't it?
Yes.
So what I would offer is, as you get those questions, that we all get those questions in sales, where we start to do this.
Yeah.
Go shit.
Yeah.
Anticipate those and write them down. When you get those questions, there's only 5 or 10, right? Write them down and then take 15 or 30 minutes in the morning when you're sharp and start thinking about, how do I pivot? You know, how do I acknowledge the question? And then like a matador, right? Like, no, we're going this way. And the best way to do that is to find those disarming questions that get them going. I don't know the answer to what you just asked me. And as soon as you open up that empty loop or that open loop, they forget about what their question was because you opened up a different loop. So just journal on it and spend a little time. But if you do that and you have 10 questions and 10 disarming or 10 questions that would disarm you that you have a counter for,
Yeah.
it's like such a confidence builder.
so much better than the way I was trained. Do you lower your commission?
Right.
No, but I do 14 open houses a week. I mean, come on. That's a better response, right?
Yeah, and we can get together and mastermind and everybody throw out their objections and kind of work on this together.
That'd be fun.
Yeah. Okay, guys, we're gonna transition